You get three different types of annuities, guaranteed annuities, and it really depends on the type of increases that they give. So you get fixed increases, you get inflation-linked increases, and you get with-profit annuities where the insurer will determine the increase based on certain methodologies linked to their investment returns. So the first two, the fixed increase and the inflation-linked increases, the charges between insurance companies are very simple. So you merely need to compare quotes from different insurance companies, and you'll find that the market is very close, so that most insurance companies provide similar sorts of annuities for the same amount of a lump sum. So that the charges are built in, and they're not necessarily fully disclosed, but the competition actually keeps those down. With-profit annuities, it's a little bit more difficult to compare one insurer to another because there's a whole methodology that goes behind how they declare their increases. So again, many of the charges are included in the annuity policy. Some are explicitly disclosed, but the real test is not just on the price of the annuity relative from one insurance company to another, it's how well you expect them to perform on the investment side and therefore declare investment returns into the future. In a living annuity, there are a number of different charges that you need to take into consideration, and there will be a wide range of charges between different providers. So first of all, there's the underlying investment products that you will need to pay for, and they will range widely from low-cost, passively based investments to sort of higher-cost, more actively based investments. Then you've got the whole living annuity legal structure, which there may be a charge for, and then there's an administration platform, typically a LISP, which also could have its own charges. So you need to look at those three charges together. And in addition to that, you need to look at what you're paying for financial advice, which might be a charge in the year that you take out your annuity, and there may be charges for ongoing advice as each year when you review your investment strategy. So typically, in fact, you find that the charges for a living annuity tend to be a bit higher, certainly over time, compared to a guaranteed annuity. The short answer to the question is yes. You can contact a life insurance company and ask for quotations for the guaranteed annuities. Probably the best way to do that is to go onto their websites, and you'll be able to do it through that process. But I think the real question behind this is, does it make sense to use a financial advisor? And that is something you need to think about. A financial advisor should be able to take you through a fairly detailed process, a needs analysis process, and help you answer a lot of the questions about the type of annuity that is most suitable for you, and which insurer you get it from. So ultimately, you need to decide whether you want to engage with an advisor, in which case you would want to ask them questions like how are they remunerated, and make sure that there's full disclosure in terms of their independence as well.